Hello, and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Today on the show, I spoke with Tony Locantro, an investment manager at Alto Capital. Alto Capital is a financial service and corporate advisory firm located in Perth, Western Australia. Tony has been advising on small cap equities since 1998 and is a regular on this podcast. We started by talking about the past 6 months in the market, and Tony highlighted the countless number of opportunities that are emerging. We discussed the market cycle and what could be unfolding as the new financial year begins in Australia. I hope you enjoy listening, and make sure to subscribe and follow the show on whatever platform you're listening to us on. Hello, I'm Ben Kostrich, and welcome to the Market Bull podcast. Today, I'm bringing back a guest I've spoken with a few times, Tony Locantro. He's from Alto Capital. I've spoken with him before. He was my debut episode, and that feels like a long time ago now. And he's all over the place speaking and a market commentator. So welcome back to the show, Tony.
Always enjoy being here, Ben, and it has been a while, but there's always something to talk about in the markets, and there's always opportunities. So looking forward to our chat.
So we're recording really around the time, end of financial year in Australia. There's been a bit of activity across the board, but I mean, over the last 6 months in particular, or even 12 months, we've experienced quite a difficult and testing period. I mean, if you're looking back on what we've really been dealing with from an investment point of view and just economies, how would you describe the last 6 months that we've really gone through?
Shithouse would be the word that covers it quite well. And I should reiterate that, look, I've been a small cap advisor for coming up to 25 years now. And one of my most successful client actually bought me breakfast a couple of weeks ago, and he's been with me since day one. And out of those 24 and a half years, I'd say we've had 8 really bad years. And during our relationship in specs, he's actually won Lotto twice. One of them was a 7-figure win on Northern Star. Quite a few others, quite a lot of little scratchy wins. But I was just saying to him, yeah, 1/3 of the time, you don't enjoy this game. And I've looked over my career since 1998. And I'm going to go on record and say that the last 18 months have been the toughest of my career. And by that, Ben, I mean that in terms of upside. So all my stocks have been belted. Some of them, there's a reason why, others no. And that just dents my client's confidence. And instead of sending me a Dan Murphy's gift card for Christmas, they'd probably rather give me a punch in the nose. So in order to really survive in this game, you have to go through what we're going through now. I think that for quality junior companies, those outside of lithium, rare earths, James Bay, Canada, and all these acquisitions, which I will mention, it just feels like the end of the dot-com bubble. But I was in the dot-com bubble. I was doing $120,000 a month in buy and sell notes at $60 a pop. And a lot of mining companies then went .com. Now you're seeing tech companies go for lithium in Canada. And it's a way to make money. I'm not, my clients have got order envy. We go to a wedding, they get the steak, you get the dry chicken, right? But it's a cult. These bad stocks become a cult. And as people know, once you're in a cult, it's hard to leave. I mean, maybe Hillsong, it'd be easy to bail these days because it's been proven it's a schmozzle. But yeah, let's look at it. The last 6 months, 12 months, 18 months, absolute shit with seeing my companies recognised by the market, while someone looks at a pegmatite anywhere and they go on a huge tear. And that's the same for rare earths. But the only thing companies are going to produce is brokerage and broken dreams. So I'm looking forward to the recovery. But okay, so that's a spec end. You look at the economy, right? Interest rates were 0.1. They're potentially on their way towards 5%. So families, mortgages 1.99, going straight to 6% with a bullet. That's real estate Armageddon. And all the bulls say, well, why haven't house prices fallen? Well, it takes time. There's sentimental value with houses. You just can't dump them like a spec stock. So we've got inflation. It came in at 5.6. It's still, core inflation's way too high. Some banks are saying more rate rises, cost of living everywhere, groceries, insurances. And what we're seeing now is people aren't going to go out and eat out. Spending's off a cliff. You look at Adairs, you look at JB Hi-Fi, even Domino's has been smashed. Discretionary spending, people stop it. So now it's all about survival. And in these markets and testing times, it's every person, every family for themselves. So I think that for the economy and real estate, it's only going to get worse. I've been watching the news a bit, and I saw these teenage bike gangs around Ellenbrook, and they're starting to terrorise people. So we're going to have a huge amount of social issues as well coming in, Ben. So I can't see any relief. I don't think the RBA has no levers. Rates aren't going back to 0.1. And once investors start to sell houses, we're in a massive load of shit. And I think to an extent, Australia is going to decay. And we have to go through tough times to reset, to get better. So, no, very, very painful times ahead.
Yeah, it has been. It's I'd like to say that there's been definitely sectors that have accelerated, but it's been short, sharp bursts. And I mean, the lithium side of it has been generating returns really for the last 2 years in a way, and it hasn't really stopped. But yeah, you get sucked into that bubble, and it's the tough idea of holding strong during these extremely challenging times, because as I refer to it, it's when you catch the falling knife, and really there's no indication of when that can happen. But I mean, on the flip side, we're seeing some companies in particular start doing some capital raises again, which I can say, a few months ago it wasn't the case, but now we are seeing some long-term investors willing, and even big, sophisticated investors getting back into some of these companies that have been battered. And it's really, I'm in two minds, because the companies in a way are giving a lot. They have to, really, because of their cash situation, a lot up front for any sort of equity, and these investors that potentially have the patience are going to get a huge payday in the long term if they can hold it. And you have to be naturally in a fortunate position to be able to do that. But I'm seeing that across the board. I mean, what are your thoughts in that current phase? Because we saw a lot of mergers and acquisitions, but now we're starting to see some capital funds and raises again.
If I just pause you there, Ben, can you stop making so much sense? I mean, this is unheard of. I'm actually speaking to someone that knows their shit. I just closed off a capital raising today for Stably Minerals, SBY. So I helped float it in 2019. They drilled into 40% copper. This stock went 20 cents to $1.40. And I had a shit ton on board. So I was there in the UK taking profits for everyone. It was probably one of my best selling efforts in my career. I think I got out near the top. But now I'm raising money for them less than 10 cents. And what's happened is they've got the copper resource. It was a little bit underwhelming, but they've been looking for this porphyry system, and they've had terrible ground conditions. They've drilled in the wrong direction. They've had experts onto it. I thought, wow, 9 cents with a 1 for 2, 15-cent option. And you've got all that underlying resource, which provides a downside support. Unbelievable. Raised money for Orient recently, as much as we wanted, at 3 cents with an option. And people don't get it. These are quality companies with assets. Some of these companies, the gold in the ground is worth $5 to $10 Australian. That's bloody unheard of. Normally, you pay 40, 50 bucks an ounce in the ground. So I have been doing a plethora of capital raisings, only small ones, just to keep me ticking over.
Mm.
I just can't believe the upside potential if you're patient. I said to my best client, look, get yourself a time capsule and put in pieces of paper to sell stock at 1, 3, 5, 7 years. That's the only way to do it. The only way
Mm.
to make money is to get into a coma or go to jail without access, and then you might be able to hold on to it. But these capital raisings, yes, they're frustrating. Yes, they piss off existing shareholders. But what does the company do? You, and when times are bad, everyone says, oh, they pay themselves too much. When times are good, oh, they don't fly to Canada often enough and they deserve business class. It's the attitude that people should do the opposite to what their emotions are telling them. And that's the key to success in the market. So what you'll find is a lot of these capital raisings will go ahead, and I call it a broker's market. So a broker can go to a company and say, look, yeah, I can raise this $3 million, but I want more sweeteners than a cafe table.
Mm.
And that's what's happening, Ben. And it's part of the normal market process. I've got years of watching this. If a company's fundamentals are good enough, sure, there's a bit more dilution, but they overcome it. And I go back, I had breakfast with my most successful client, and we looked at all the major wins came from adversity. He was able to buy Northern Star at 4.7 cents, not 20 cents. Ramilius, same story. So it hurts,
Mm.
but that's where we're at. And it's part of the cycle of speculation. But what really sucks is the US market's done pretty well and other markets have done well. And then they say, well, the index is okay. What about my spec stocks? So it's a weird time in the market.
Yeah, well, I've seen the US, some of the companies there, especially naturally the big tech companies, have really accelerated the index. And it's an overarching, it looks really pretty, but again, there's still been some companies in there that have been hammered. There was that brief AI hype where Nvidia just went bonkers. There were some Australian companies, I think Appen had some incredible days, but then it all subsides within a matter of days. And we've talked about it before, the dopamine levels of people just having to get in and out. There's no ability to be patient and hold the game plan and the line and stick to it. So going back to the capital raises that are coming, are you seeing it in particular areas and commodities of the market? Is it a full spread? I can't imagine there's much in the discretionary spending activities, but particularly the commodity side of it, there must be a full spread of different companies that are doing this. So are you seeing it in a particular area that's stronger or weaker, or what's your general consensus on that?
Oh, it's spread across mining and biotech. I've helped out with some biotech capital raisings as well. So they're at deeply discounted prices. And the only way you can really get anywhere is to go through these clinical trials. And share prices, a company looks vulnerable on a quarterly report. So they're targeted with selling, then they try and raise money, then the price goes lower, and then they're forced to raise at a giveaway price with options everywhere. So I've certainly seen that in the biotech sector. A couple of my junior golds have raised money. Oyerman, which I mentioned, Mako Gold over in Cote d'Ivoire, need money to get through a 1 million ounce resource. So it's unfortunate. It sucks, but the area I do have a concern is that loyal shareholders in these companies are fully stretched. They are fully invested, and the new brokers coming in, some of them are just going to flip the stock. Some of the shareholders don't care about the company. So that's the first layer of resistance we have to get through. But again, it's part of the cycle. So you either raise money and grow, or you turn out the lights, cut salaries, don't drill, and wait for the Imodium bubble or the kryptonite bubble to come.
Mm.
So I think companies should plow through this, to be honest. And if they've got the money, yeah, great results, fundamentals, make a discovery, you do get rewarded. But sadly, the gold results don't get people excited yet. 100 meters at 3% copper with some gold does. So we're just going to be patient.
Yeah, no, exactly. And I mean, that ties into certain commodities. And I know we talk a lot about gold, and it's in a holding pattern again, at least on the spot price, but there's definitely been some decent movements in some of the small cap gold stocks and others in the inverse. So, I mean, are there any other examples within? I mean, I love uranium. Naturally, I saw a bit of conversation about copper recently and that being undervalued and that we're not prepared for the increasing demand for that. But I mean, listing some of the commodities that you see, or even and potentially the biotech as well, where are you seeing some real opportunities emerging?
Well, that's a great question. I had quite a decent setback on one of my biotechs, Narada. So they had a toxic, toxicity issue, struggle with some words, on one of their tests. So 10 tests out of 11 passed, one didn't. So it was an adverse reaction to the cholesterol drug. And this stock got absolutely
Collapsed.
slaughtered. Yeah. And suddenly I cop it from everywhere, which I guess I am a bit of a media head.
Mm.
But then suddenly there's pressure on me. And then I have to look at it and say, well, wait a second. This company's now below cash backing. And if they get their R&D refund, it's well below cash backing. And they've got a traumatic brain injury program that's advancing. And the cholesterol's not dead. But that's how fiercely, I don't know, speculators can be so rampant with the selling. It's just no regard. And it's tough for my clients to buy at these prices because we bought it a lot higher. So I stepped in and bought some more. And I have to be patient now because it's a blockbuster cholesterol drug. And these things take time, and you are going to have periods where you do get beaten up. And that happens with most stocks. So, yeah, I'm just trying to overcome that. I was pretty active in the screen today. We could buy it sub 3 cents. So obviously those people that don't like me will hammer me, but I'm thick skinned now and the mute function works well. But I had a meeting with a uranium company, Basin Energy, up in the Athabasca Basin. I think that could come to prominence. That stock's been struggling, trading 13.5, 14 cents. Pete Morehouse, ex-Alligator Energy. So, yeah, I do have a little bit of interest from clients in that stock. Not a great deal because the last real uranium burst was 2005, 2006.
Yeah.
And that bubble really was the second most powerful after .com.
Yeah.
.com was madness. Uranium was pretty friggin' crazy. The 2008 lithium bubble or a Cobbrain Galaxy, that was a pretty good bubble, but this is a lithium bubble 15 years ago. So, but look, I look at the copper sector, base metals. I am heavily invested in Morona Metals, MMA.
Mm-hmm.
So they have, it's lead, silver, copper, gold, up in Cloncurry. It looks fantastic. They've put out visual cores for the last couple of months. The market couldn't give a shit about lead sulfide, but you mine that stuff. And lead goes in batteries and silver is poor man's gold. So we've been buying a lot of that. Red metal, RDM owned 50% of that. That looks great. We've been picking up Eagle Mountain, copper project in Arizona. Charlie Bass, who goes way back, keeps tipping him money. He's agreed to loan the company money. Great resource in Arizona. They've stated their intentions to become a copper producer. So we've been buying that. The Stately capital raise I just mentioned. I'm amongst some of these gold companies as well. Oryaman. I went to the Gold Coast conference, Nicholas Reed's conference at Royal Pines, which is easily the best retail shareholder conference in the country. I love this conference. I bump into people that I've seen over many years, and I came away with Gascoigne. I was just amazed. I thought, this is way too cheap. Surely another company's going to buy this. It's capped at bugger all. High-grade gold discovery. It's coming in just under 5 grams per tonne. and they've got this beautiful plant within distance, and probably tax losses upon tax losses. And I thought,
Yeah.
well, this is one of the most undervalued gold stocks on the market. So we poured in, it's done well. I've been buying Saturn metals for clients. Just upgraded the gold resource to 1.84 million ounces. Stock's capped at 30. Go figure. These are just
Gems.
10 stocks in a lifetime opportunities just to make a shitload of money. And this is how you do it. You don't make a lot of money buying a stock at 20 and having it go to 22 cents and go sideways forever.
Yeah.
Gotta cop the beltings. I'm in my biotechs. They're looking good. Dimerics phase 3 trials for a rare kidney disease. There's no other real advancements in kidney disease for 20 years. They need to raise money. They raise it at a low price. Stock gets belted. Management is shit. Get rid of them. Another opportunity. So it's across the board. And what I've done over many bull markets, Ben, I've learned that clients need to put some profits away for tax, because the ATO, you can't escape the ATO. And so you've got to look at that. And you've also got to look at dividends. So I've found a little small industrial, which trades via appointment. I think they traded one share today, one share. So they pay dividends, great growth. So some of my clients that are okay to buy a dividend stock will redirect some profits into that. Admittedly, the last 18 months, I think crap.
Yeah. Well, it's one of those ideas that I'm flooding because, as you said, you've been in it for so many years, and arguably this has been one of the most testing times to deal with and monitor and go through. But I mean, what has made this period so unique, different, or challenging compared to others? Or, as I always see in a lot of the education, it might be different headlines and a different time of the year or whatever, but these are just natural market cycles, and naturally that these commodities that get belted or these stocks that get belted, there's always a different headline, but at the end of the day, it's just how the market works, which I think people get sucked in and they don't know what's going on. But what's made this potentially so different or unique?
The crowd's gone mad. It's just absolute madness towards. So the money's gone towards the bandwagons and the cult stocks, which quite a few will come out being profitable producers. But I've just never seen such disdain for decent companies. And this is the worst I've ever seen, that professional management that have worked for the bigger companies struggle to get any interest in their own when they've got gold in the ground, they've got clinical trials, and the market, I've just never seen them so poorly treated. And what I've noticed is that the market is full of fair weather friends. So they're only happy when the share price is close to what they paid for it, or when they're making money. So it's another lesson for me that when the crowds turn against you, and they certainly have for us, we've just got to soak it all up and move on. And the other unique factor is that the major indices have held up really well. So people expect that when the index gets pummeled, the specs get pummeled, but the indexes have actually risen and specs have been slaughtered. Now there's a mindset of a speculator that they'll never make money, because once the index corrects, their stocks fall as well. So I think hope has pretty much, people have given up. You always get those, say, sell everything at the worst possible time when a company's trying to raise money or there's no buyers. I mean, I've had some clients that have moved money to other ventures, but there's not enough buying on the screen because that's the market we're in. So, and the other point is that shareholders look for the quick exit. They'd rather have a low ball takeover to get the hell out when they're really talking themselves out of the upside. So no one can see the upside at the moment.
Yeah, everyone's got the burnt mentality. I just want to get out. they don't want to look back, but it is that idea that, all the education that I was doing during COVID, the whole transformation of technology and access to information means that people don't take the extra moments to reconsider their decisions. They're just going to go sporadically and follow the herd more so now than ever before. And it's just been this psychology switch and this just reactive nature towards anything that's happening. And you look at it's across everything. There's no company in any area that hasn't been sort of saved from this sporadic selling to the top to the bottom. And it's really it is tough going. And that's where I'm thinking, naturally you can't catch the falling knife, but eventually everything stabilizes. And then, as you said, your job becomes a hell of a lot easier because everyone's suddenly so much more positive, and it's so much easier to deflect blame and just hurl abuse in a polite sense at other people instead of thinking it through and going, well, look, if this is me, as you said, in the time capsule 5, 7, 10 years down the line, which a lot of investing should be about, then you suddenly go, well, why am I getting so fussed about a 3-month period or a 6-month period? Because in reality, if I'm looking back in 10 years time, what you'll be like, why didn't I buy more in some potential cases? So it's that, how do you manage your emotions? How do you decide what you want to do? And as he said, there's these golden opportunities with companies that are, on their knees and giving up these incredible opportunities for investors. It's just about actually, again, believing in them and going, hey, look, I want to get back in because this is going to pay dividends. If you gave them money at one level, why wouldn't you give them money at a lower in some cases? Because if you trust all the fundamentals, what's really changed other than the sentiment, which eventually does switch. But I mean, we're moving now into the new financial year. I mean, it's hard to say that, just overnight everything's going to change, but what can you see maybe evolving or adopting or changing in the next financial year in Australia? I mean, the other countries and indices, sorry, not countries, but jurisdictions, they're different cycles altogether. But what do you see really happening in Australia over the next period of time?
I think that the coal stocks, people start to turn against each other, and that normally involves class actions, 249Ds when they want to roll boards, because a lot of these stocks defying gravity, and they won't be able to. A lot of lithium rare earths companies, as I said, will never get anywhere near production. They'll go through studies, and then suddenly we'll have another bandwagon. So we've got to go through that phase of the market, and that's painful because it really targets new investors. New investors will go on the bandwagon, and they're the first ones to leave. A lot of quality juniors, I can value them on a piece of A4 paper. I can look at them, but that undervaluation situation is going to take quite a lot of time to change.
Mm.
So someone's going to drill into something. We're going to have a major discovery from someone. Then you get what's called a neurology bubble. And these are some of my favorite bubbles when companies close to a discovery go through the roof.
Mm.
I have a saying that mining companies don't share tennis courts, bars, and facilities. Sometimes it's good to be 300 kilometres away, but on strike. So I remember when Minotaur drilled into Prominent Hill, and I rang David Harley from Gunson, and he said, oh, geez, I'm 300 kilometres away from that discovery. And his stock went up 500%.
Mm.
So I think we'll see neurology. I can see that I think biotechs will get off the canvas. That's been the most brutalised sector I've ever seen. And once a lot of them now have raised money successfully, so we'll get back to clinical trials. Next bandwagon, I'm hoping it's going to be manganese, which is the last of the real battery components to run. That's totally out of self-interest, Ben, because one of my gold companies has just stumbled on some manganese. I'd like to see, something else have a bit of a run. Maybe can we get back to good old-fashioned gold and silver? Because people are attracted to something exotic. Probably like women. And people are prepared to overpay for something they don't understand as well. So, if the next financial year is as bad as this one, that would be pretty bloody painful for me.
Yeah. let's hope it's been the worst that we've had, and then it can all relatively simmer, start recovering, and see some, again, traditional fundamental companies start accelerating and proving why they should have never been on those levels to begin with. Because yeah, it's been brutal, but it really does open up the potential that, look, if you can, there's some companies that it's a no-brainer, as you said, and it's just about being diligent, being on top of it, having a game plan and sticking with it. And I like the idea that you said go to jail. Means you can't check your portfolio and just come out and then suddenly, oh, look, some of them have gone up, but all you need is one or two, and then, it doesn't matter. But thank you so much, Tony, for taking the time to speak with me. It's always great. We always bounce off. I'm hoping that finally we'll have a conversation at some point where it's just going to be all positive. But I think that's the reality of markets, is that, it's just ups and downs. And that's why, you might hate it sometimes, but that's why so many people flood back to it, because it's always something happening. And I think that's one of the beauties of the free market. So thank you for taking the time with me today, Tony. And for people that want to follow you and get more information about yourselves, where can they go to?
I'm fairly active on Twitter, so just search for me on Twitter. There's probably a bit of, with this Narada setback, so it's probably a bit of negativity towards me there. But
Do you try comments?
But that's normal. I'm going to have detractors all through. I guess if you have stocks that don't perform, but what I've learned, Ben, is when my stocks do recover and go really well, I'm just going to keep my mouth shut. I don't respond to anything. The best function on Twitter is the mute function.
Yeah.
So anyway, so follow me on Twitter. And I also want to say that day trading, rampant trading, which has infiltrated the market, it just provides a similar dopamine hit to cocaine, sugar, and porn. And long term, those three things aren't good.
Yeah. No, great. Easy. Well, this has been a fantastic, quick and brief insight. I'm hoping to have you back. I mean, I will. I know I'm going to. But take care of yourself, and I'm looking forward to speaking with you again soon, Tony.
All right. Cheers, Ben. Look forward to it.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.